And then our main evidence is about the ETF stock ownership effect on stock volatility and turnover. And what we do here is we try to identify this relationship, and in a way that we can infer that there is a causality that happens between the two. We run a battery of tests to try to document that, and most importantly, we look at whether this effect is purely an intraday phenomenon or whether it survives in daily returns and in daily volatilities. And most importantly, we look at that, we dissect the arbitrage channel itself. So we wanted to see whether it's through arbitrage that this is happening, these shocks are propagating. So we look at various proxies for arbitrage, and we see that it's actually this kind of arbitrage trading that's transmitting the shocks from the ETF due to high turnover clientele to the underlying stocks themselves. So to pick at our results, we first look at the rate of incidence of liquidity shocks to the stocks, and we say that it's likely to have increased because of higher ETF ownership. So an increase in ETF ownership would lead to higher stock volatility and turnover. And we conclude that ETFs increase the volatility and turnover of underlying stocks by exposing them more to the demand shocks, the non-fundamental demand shocks of the high turnover clienteles of ETFs. And then we zoom in at the arbitrage channel, and we try to see if this effect, the ETF stock ownership effect on volatility and turnover, is magnified by various proxies of arbitrage opportunities. And what we find is that the higher the arbitrage opportunities, the higher the flows, the lower the cost to arbitrage, the stronger the effect of ETF ownership on volatility and turnover. So we conclude that volatility and turnover, they increase on days when arbitrage is more likely to occur.